All right, what's up, everybody? We got March in the house. We are live. It is Wednesday. It's 8:30 AM EST, excuse me, for the throat clearing. Things happen. And yeah, we're doing it here. We're doing it live. Go ahead and just share the screen. Bitcoin doing as predicted. Love when that happens. It's you can generally have an idea of where things are going, but when you call it out so precisely, it's just like, oh yeah, it just kind of gives you hope. Like, yeah, I can do this stuff, right? Let me zoom in on the screen a little bit so you all can see the actual numbers, price numbers. Give me 1 second. There we go. So yeah, that's what's going on. Bitcoin coming out of this massive head and shoulders here, going back to the early mid-April, popping up and apparently consolidating at the top of this large consolidation that we've been looking at for months now, going back to March. At some point, it does look like price will break out. We're in the middle of this, like I said, like a smaller consolidation here at the top. It looks as if price will hang out here for a bit. It hit that top target, or it almost hit it. I mean, just below this last target. Now, it may very well go up and grab that target from the head and shoulders, right? First target was right here at 68,677. Next target will be 72,290. And price is very likely to grab that in the next few days. So it should pop up and do that. So let's see here. Interesting. I know I've got people watching, but YouTube, our streaming software says nobody's watching. It's really, really odd. I know I had several people watching there, so very strange. If you're in the audience, do a shout out in the comments. Let me see if there's some kind of malfunction going on. We're live on YouTube, X, Rumble, and then we will flip over to the private live lab over at Algo Factory. Zap the QR code if you want to know what that is. But yeah, it looks like Bitcoin is just going to be what it is right now. It's going to probably consolidate in this high area. It may roll down and grab some liquidity in the mid-range. That's why I do have this kind of path where it dumps down a little bit to grab liquidity right there. Now I drew this back on May 15th. So this, pretty darn accurate for a week later. But what I want to do is take a quick look at our events today. Cool cat in the house. Yeah, okay, good. So whatever's going on, I know I got people here. I just don't know how many are watching. So it should be a few. Today at 4 p.m. EST, right? MavBet, thank you. This is going to be 4 p.m. EST, so about an hour before the market closes, if I'm not mistaken. You've got the FOMC meeting minutes, right? I'm not really an equities trader. I would have it lock, or I have it on lock what time the market closes. But for some reason, I just always forget. Is it 5? Is it 4? I think it's 5. But either way, you got the meeting minutes for the FOMC. So those of you who are trading equities, like right up and leading to the close, you might have an hour of some pretty good volatility. Let's do this real quick. Stock market hours EST. Let's get that down. I'm almost positive it's 5 p.m. Say 4 p.m. EST. So right as the market closes. So actually, if that's the case, then today might be real slow. What are the minutes? What is FOMC minutes? Okay, so when you have the Fed funds rate, right? And I believe that was 2 weeks ago, and it usually happens on a Wednesday. And they talk about what the interest rate is where they're going to set the rates. And all of the rates at which money is lent, aka borrowed, that's all kind of based on the Fed funds rate, because money is all debt. And so when new money is created, it's all going to have a payoff. It's going to have an interest rate. It's based on bonds, based on treasuries. So because of this, then everything else is going to base its rate on that. So mortgages, ultimately car loans, you name it, the higher the Fed funds rate, the higher every interest rate is. And the more expensive money is, the less money there is to go around into investments. And we spent several years basically sitting at zero. And this was done, I think it was done for a number of reasons. It definitely caused, a lot of money to flow around. It caused the stock market to go up for about 12 years. The rates were set extremely low post Great Financial Crisis, post 2008. And, of course, we had the markets moved down to about 11 or 12. And then after 2012, the markets have just pretty much gone up. In fact, we might as well take a look at the indexes right now. See how the S&P is doing. Okay, so here's the E-mini futures, all-time highs and staying up there. In fact, what we're looking at right now for E-mini is a little bit of a bullish pattern. I'm going to roll down to a lower time frame to look at this so we can see the structure, because this is a bullish ascending triangle, at least from what I can see without drawing lines. But what you have is this shape right here. This means price is probably just going to continue up on this, okay? And price tells a story. So, pattern trading is, a lot of newer people like to trade patterns. Patterns are easy to see, and pattern trading is fine. There are times when the market will create a pattern and price does not follow the predicted path. So, pattern trading is not a perfect thing. And then, of course, you got traders who will shun it because they started out pattern trading and then they got some higher level, or at least they got some different types of methodology behind them. And then they feel like pattern trading is, that's beneath them and that's for new people. You know what? I still incorporate it. Of course, I trade algorithmically. I trade, what some people consider to be pretty high level. Good morning, Find and Durham. But with that, I'd be careful in trying to say, oh, well, that's for beginners. Of course, sure, a lot of beginners do it, but it's still valuable. And the reason the pattern trading is valuable is because it tells a story. Okay, so what the story is that the price to action is telling is that there's this constant battle between the bulls and the bears. And if you're super new to trading, the bulls, right, they push up with their horns. That means price is bullish. Price is going up. Bears claw down with their claws. That's why some people think that there's that distinction between bears and bulls. Bears push price down, bulls push price up. I don't know if that little story about claws and horns is true, but that's how we can remember it, right? So in this case, price came up and met right by its all-time high back in, let me see, this is in March. So price came back up to test that all-time high, which was S&P at 500 or 5,300, right? And it made a new all-time high at 5,350. And then it came back down. And then it came up again to retest that. So the bulls got strong again, right about 5,300, took it back up to 53. The bears clawed it down to 5,320. The bulls pushed it back up to 5,350. The bears clawed it down to 5,330, which was the all-time high. So if this were to continue and the bulls were to catch it higher and higher and higher and higher, and the bears are defending this 5,350 every time, well, I mean, that kind of tells you who's stronger, right? The bulls keep catching it sooner and sooner and sooner, and eventually price is going to head up if this continues. And this is enough data here to predict that it's going to continue. Right now, things can change, market conditions can change. There's a lot that can change, but in this case, if things did not change, we can predict where price might go on this. And the way that's done is that, at least the way I was taught to do it, is that from the bottom of the triangle to the top, you put your fib extension tool, right? This is a Fibonacci tool. Now I've taken a Fibonacci retracement tool and I've turned it into an extension tool. So let me go ahead and use the original tool meant for what I'm doing. Okay. I start at the beginning, you go to the top, come back down to the beginning, and there you go. So price usually is going to go, because there's no price history up high, right? Price has never been above this level. So this is new territory. This is what you call price discovery at this point. So because there's been no price action up here, the only guide we have are Fibonacci levels. Fibonacci levels exist in the universe. They're, the way that your fingers are measured, each knuckle to the next knuckle. It's in, the way that whales blow bubbles in a circle in a pattern, like Fibonacci numbers are just magically in the universe. It's called the golden ratio. And in this case, the two targets I would have, if I were just to say, hey, I'm going to bet on this, I'm going to go long, I would wait. I mean, now is a decent time to go long because you see we're at the all-time high right here and prices come down to that all-time high. And we're at the bottom of this kind of ascending trend line, if you will. I'm not really big on trading ascending trend lines, but in a triangular formation, it's worth a look. And on top of that, we're in the middle of price going back and forth over this consolidation. There's a lot of liquidity right here for price to grab, because you see price kind of bounce back and forth in this area, right? So there are a lot of reasons why price could go up from here. Now, the safe thing to do is to wait for price to break out of the high, because price could break downwards. Just because this pattern exists doesn't mean price is going to head down. And a lot of people would wait until the high was broken, right? So if I were to put these targets out, I know the safe way to go about it would be to let the price break above that high, right? This 53.50, and then go along at that point. That's the safe way to go. Okay. Now there are those who they like to try to get a little bit more out of a trade, and the deeper you enter a trade, the more room you have for profit. So one could consider, if their methodology lined up with this, if they, if whatever way that you trade works with this, if your own algorithm, if your own method is good with that, you could enter now, and then you could split the difference and enter later, maybe like a smaller amount now, and then enter a smaller amount once, maybe a bigger amount once it breaks out and it's safer. Again, none of this is investment advice, but this is just the way the trade strategies work. And I can almost guarantee you that across the other indexes, this all looks the same. You've got, let's see, this is the ES1. You've got the Dow here. Let's see if we got a similar, a little different. Dow's looking a little weaker. So Dow actually may come back down to grab liquidity around about 39,700, right? And then you have the NASDAQ. And NASDAQ, it looks even stronger than the S&P. So everything seems to be a little tech heavy. Like the move up is techish. And I think today NVIDIA, NVIDIA earnings is announced. So let's see here. Yeah, I think that's today. And NVIDIA looks like it is just going to break out. No, earnings is, what is this? Friday, Wednesday, 22. Yeah. According to this, the 22nd of May, NVIDIA earnings comes out. And this looks primed to bust upwards. I would really, if I were going to play equities today, just a big old clue to everybody to do your own research. And I'm not giving investment advice, but I would look to go long on NVIDIA. Probably to I don't know what this line. Okay, it looks like I did some Fibonacci measurements before. So I know we're going a little over on the public show here, but this is pretty valuable. I think that NVIDIA is going to move up, and I did some Fibonacci measurements prior to today. Yeah, so I'm looking at the most recent extension upwards, and that should, yeah. I wonder where these targets came from. Okay, I think I see what I've done here. There's a couple of different ways to look at these extensions, but the strongest move up goes back. I'm going to just draw a line here so people can see it. Strongest move goes back to the pivot on February 28th up to this top. So let's see if that's what I had done before. So I'm going to start at the beginning, go to the top, pull back down. Yeah, it looks like that's what I did before. Yep. Okay, so if I were to go long on NVIDIA, right, I would do something like this. Wait for, I might anticipate earnings. Look, here's the thing. If you go in a trade before the data comes out, you can get rinsed, right? You can get rinsed, meaning that price could go against you. It might be NVIDIA's earnings did not meet expectations, but being that it's NVIDIA and NVIDIA has pretty much held up the market for a while now, there's a decent chance earnings are just going to go up. So one way to go about it is to get in early and get in before the earnings statement. I know a lot of people are playing that. The other way about it is to let the statement happen and try to buy afterwards. Now, chances are, if the earnings statement is positive, price is going to gap up. And I don't know what time that happens. Earnings I doubt it happens after market, but this is a decent thesis. Like the low of the consolidation right here is going to be basically here. Okay. So, and then there's a lot of liquidity on this consolidation prior to it, and price may go down to grab some of that. So the safe thing to do is to put a stop below that, right? I know that's kind of a deep stop, but on earnings day that can be tricky. So if you are nimble and you are able to just buy right as earnings come out, you might be okay. I don't know. I don't trade a lot of equities, but if you are that nimble, you might have an opportunity to do that. Otherwise, if you're a little gambly, but you're willing to take that risk, it might be a nice reward.
Jack be nimble, Jack be quick. Jack jump over the candlestick.
Oh, sorry. Jack suck what? So I would I would look at 1030 and 1100, or just below that, like say 1025 or 1028, and maybe like 1099 or something as my targets to go up on Nvidia. And like I said, if you're not nimble, you could always take a risk and put a little on there. But if the earnings come out negative, then that's going to be another story. And I just doubt it. You weren't in an election year. Everything is just kind of forced to go. I know pre-market's already at 957. So it's, pre-market is already partially into this. So you might not have a chance, to catch it at this level.
Yeah.
But if price kind of is, gets a little dip, or if you have another formula to play Nvidia, remember earnings are today. And you know what? Chances are if earnings are positive, it's going to go up for a while after that. So, but right now, actually entering is the 957. Okay. So that's pretty much where it is. So yeah, I think Nvidia is the play for those of you who are a little gambly, but again, not investment advice. Be the Gorilla. How you doing today?
Hi.
Oh boy, you're drinking the GAHHAY coffee.
Mm-hmm.
Nice.
It's called Rainbow Bright.
Oh man, the kind of chemicals they have to put in coffee to make it rainbow.
Oh my god, no! It's coffee's black. It just gives you feelings of gayness.
Yeah, that's right, man. Oh boy. All right, good. Well, you caught us right here at the end. I took a little past the usual time just because we had some good data on Nvidia. We figured we'd give the public a little something extra today. But if you please could get us out of here and get us into the private live lab.
Public. Yeah, absolutely. Listen, guys, don't sit on the sidelines wondering if this is for you. You try Rocky Road ice cream. You maybe want to check out German chocolate cake, but you do Algo Factory, my friend. You do Algo Factory. So check us out, algofactory.tech. Join us in the live lab where all sorts of juicy information is shared that you will not hear anywhere else. Join us or be square or die.
Join us or die.